Gold and silver should go into some astronomical figures, and at that point, other asset classes will become undervalued, and that's when you do want to sell a portion of your wealth insurance that has given you spectacular gains and move into the next asset class that offers great. This is that 3-month Treasury bill. It's the yield on it going back to 1982. And what you see here, this is almost 16%. In the 90s, the NASDAQ started to go into a speculative bubble. Alan Greenspan called it irrational exuberance. And he started to tighten and raise interest rates. And here we are up at 6%, above 6%. And so he raised it until he popped the NASDAQ bubble and caused a recession, and then lowered it down too far and held it down too long. And he was trying to get the markets to go back up. He didn't see the real estate bubble that he had created over here. By the time he saw it, he started raising rates very methodically, very carefully, trying not to pop that bubble, but to bring us into for what he called a soft landing. Then Ben Bernanke took over, and we didn't have a soft landing. We had the global financial crisis of 2008. What did Ben Bernanke do? Bernanke was mopping up the disaster that was created by the Alan Greenspan bust. The Alan Greenspan created 2 busts. Bernanke's reaction was to take it to zero and hold it for way too long. He should have started the raising interest rates like he is now back in 2011. And they didn't. They kept it going. He started raising rates. Janet Yellen took over, then Powell, and then we had the global health crisis. They took it back down to zero. Now they've raised it just a tad there. What else happened during that period of time? Ben Bernanke took the currency supply from 0.8 something billion up to 4 billion. And then Yellen came in and did a little bit of taper. And then we did some quantitative tightening. I think this was under Powell here. And then that didn't work very well. We had a little crisis. They created a bunch of currency with repurchase agreements not measured in this graph here. So there was an emergency going on back here. They addressed that with repos. Then we have the global health problem. And this is where we are today. So, this is huge, from 0.8 to 6.1 trillion of base currency. So we've manipulated the economy in both those directions, interest rates and that. So gold and silver, precious metals, are not some short-term speculation. Buy the dip says that you're going to buy at lows and hopefully sell at highs. Well, markets go up and down. Gold and silver could go down for a period of a couple days or a couple months. Is this the bottom of the dip? I don't know. It could go down further, but it can't go down a lot. But gold will go higher. This is something I am very confident of. I'm not guaranteeing it for you, but I have bet my life that gold is going higher, a lot higher than where it is right now. And it is the geopolitical concerns that we've got going on right now and the rampant inflation that is the driver for astronomically high gold prices. So the risk-reward ratio, there is a little bit of downside risk potentially, but it's short-term, and that is limited by the cost of gold mining ultimately. The reward ratio is, as you're going to see toward the end of this video, pretty darn high. So this is the reason that I have bet my life on gold and silver. And here we have what's going on in the world today. So what's going on in the markets? The S&P 500 has rallied the past couple of days. So why is that? This is Friday, the 18th of March. Why have they rallied? Well, right here, the Federal Reserve announced that they did a 25 basis point rate hike. That's 1/4%. 100 basis points is 1%. So what does that mean? This is the dynamic yield curve. When the Fed goes and raises rates, they're talking about this one right here. This is the 3-month Treasury. This is the rate on the 2-year, 5-year, 7-year, 10-year, 20-year, and 30-year. These are bills, notes, and bonds. And so They raised this rate. But I want to point out a couple of things. This is the S&P 500 index, and you see this giant bull market that it's been in since 2008. But you can take this and sweep it across and watch that rate change. Now watch the 2-year, especially this second one, compared to the 10-year, right there in the middle. Whenever that inverts and the 2-year is higher than the 10-year, we have had a market crash along with a recession. And then here it is again, the 2 and the 10 invert, and then a market crash, the global financial crisis of 2008, a pretty severe recession. Then Ben Bernanke pegs us at 0, and it goes along, and Yellen takes over, and Powell takes over. We raised rates a little because they finally were able to generate some inflation, and they wanted to sort of slow down the markets. Well, you can see that the markets sort of freaked out over that. There was on again, off again tapering and quantitative easing, and there was one period of quantitative tightening, and then we have this big old market rally, and then the peak, and then it's pulling back. But watch here where they change the rates and they go up 2.5 basis points. Don't just watch the 3-month, but watch the 2-year. The 2-year went up like a full point. The 3-month went up a quarter point, but the 2-year went up by about a point. And the point of all of this is that the 2-year and the 10-year are very close once again to a spread that it doesn't take much now for the 2-year to be above the 10-year, predicting a severe recession and market crash. And I believe with what I'm going to show you next, how skewed the economy is now, that this would be the greatest crash in history and a very, very severe recession, one that may turn into a depression, which we may or may not ever come out of. Who knows what the future brings? I think that we will come out of it, but that will provide the opportunity.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow. in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.